Hey everybody, welcome to Trading Capital's exclusive analysis. In today's video, we're going to be discussing primarily the XLK, the technology sector and fund. What's important about the technology sector is that it incorporates a large majority of the mega cap companies: Amazon, Google, Microsoft, Apple, Nvidia. So the bellwether names that typically push the market higher or lower make up this indice. And obviously technology has the heaviest weighting in the S&P 500 as well as the NASDAQ. So it's very, very important to pay attention to. Now, short-term price action. This is the weekly chart. Basically, a lot of market participants are looking at the fact that we got a weekly close above the previous all-time high, and you did confirm that breakout. Now, before market participants get too excited about this breakout, we have had a 4-week extension move, very, very overbought on the daily chart, and you're getting extremely overbought on the weekly chart. So again, will this breakout hold? Time will tell, but one thing I want to bring to your attention and put on your radar is that this breakout is a little bit skeptical in my opinion. Although we do have a potential bullish flag formation that has broken out, you got that weekly confirmed break. If you scroll all the way back on your chart and draw a trend line from the 2000 high pivot all the way to your 2022 high pivot, this is a 23-year trend line in the making. Look what we just tagged. 3 major pivot zones. Typically when you tag a trend line that is multi-years, multi-decades long, price action rejects off of that area. The last time we tagged this area over here, market saw about a 35% decline. Will we see that here? Maybe not a 35% decline, maybe not even a 30, but we should see some sort of a decline off of this major trend line of resistance. It's certainly fascinating to see that on the daily chart, as soon as we tagged that area there, market participants started selling, and you did see a little bit of a hammer doji candle reversal at the all-time high. So where's the next area of support going to be? The big area for the bullish market participants is to hold this breakout trend line. If you can consolidate for several weeks on the weekly chart here, right above this previous all-time high, the markets have a chance to actually start to get through this area. But right now we're too extended. You're going to need to see some sideways to choppy price action. If you lose this high pivot zone over here and you get a weekly close below that area, the next breakout level is going to be a retrace all the way back down to this trend line of resistance. You can see if we draw a parallel channel on the daily chart, just bear with me, we were chopping in this parallel range for several weeks until we got that breakout. If you lose this trend line sitting at 181.25, you're going to have a waterfall sell-off probably down to around this previous breakout trend line. That will be the next big area of support. So pay very close attention to this area here sitting at around 181.20, 181.10. Look for a daily or weekly close below that level to signify a potential trend change. But again, this long-term weekly trend line going all the way back to the 2000s is a big area for the markets where we have been rejected. You want to respect previous support and resistance trend line, even if it looks like we're breaking out on the weekly chart. Typically, long-term trend lines of 20 years or more have a strong, very high degree of probability of rejecting price breaking out. And then if you simply draw a parallel channel from that same pivot all the way through, and you basically mimic that same symmetrical move, you can see price action rejected. That was your pre-COVID high. The high before COVID hit the world and the market started selling off was right at that trend line of, or right at the parallel channel of resistance. And then basically central banks started intervening, lowered interest rates, and the markets rallied substantially through COVID. The free money printing and the lowering of interest rates, the zero interest rate policy, caused the markets to hit the high pivot zone here in the parallel channel. Once the Fed started to go on their inflationary reduction cycle, i.e. raising interest rates and starting to withdraw capital from the markets and the equity markets, markets started to sell off and they hit the low end of the range here. And now we've actually bounced since inflation has started to taper off. We're hitting that 3% range on the CPI, and markets started to rally. Now the big question is, are we going to enter a deflationary scenario? We're in a disinflationary scenario where inflation is trending lower, but will we see a deflationary scenario where inflation actually starts to go below zero? If inflation starts to go below zero and we truly enter a deflationary scenario, that's historically very, very bad for equity markets and stocks because it means a very, very low trending environment for global economies around the world. We already know Germany's in a recession, the largest economic engine for Europe. Typically, Germany, once they enter a recession, the likes of other countries in Europe are very, very close to following them. And when Europe makes up roughly 30 to 40% of the S&P 500 company earnings, it's certainly going to be a headwind for the markets as opposed to a tailwind. So pay close attention to this parallel channel as well as this resistance trend line that goes all the way back to this high pivot in 2000. If we get a close above this trend line over here, then it will kind of negate that trend line of resistance. But until we establish above this area, you need to respect this as resistance, and you're likely going to see sellers starting to emerge, just like we saw over here. So time will tell. It's certainly a very, very interesting spot in the markets. The markets do not favor on the risk to reward basis going long. I would personally not be chasing the long trade here, especially if you're late to the party. On that note, thank you all for tuning into this video, and please give it a like down below.